So, good evening, everyone. A very warm welcome to today's panel discussion on the theme From Career Milestones to Financial Milestones, a roadmap for young professionals. So, this evening is made truly special by the presence and immense support of our beloved principal, Professor Dr. Ajimon sir, and of course, our enthusiastic president of MAC, Marian Alumni Association Kuttikanam, and it is none other than Sri Joji Sebastian, our dynamic vice president, Sri Dario Ebi, and our enthusiastic secretary, Sri Balu Krishna, and all other executive and governing body members, beloved faculties from different colleges, our vibrant student community, and of course, our ever encouraging alumni community. So definitely, it is because of the constant support and motivation of all of this team that the career and professional development wing of MAC could host several different programs for the year. And we are deeply grateful for all your presence today. So let me introduce myself. I'm Dr. Steffi, presently acting as Director of Career and Professional Development Wing of Marian Alumni Association, and I'm working as Assistant Professor in the Department of Commerce, St. Aloysius College, Edathua, your moderator for the evening. And I'm honored to be facilitating this conversation designed to empower and equip today's youth with the tools to build not just a meaningful career, but a financially secure future. So, as we step into a rapidly changing professional landscape, financial awareness is no longer optional, it is absolutely essential. And tonight, we will break down the building blocks that connect the dots between career progress and financial milestones. And we are joined by four exceptional speakers: Sri Anand Kuriakos, Dr. Shinil Sebastian, again Sri Davis Joseph, and Sri Jubi C. Baby, who bring deep insights into banking, mutual funds, the stock market, and insurance. Together, they will guide us in understanding how early and informed choices can shape a secure financial future. So, now, ladies and gentlemen, it is my immense privilege to introduce our distinguished panelist, Mr. Anand Kuriakos, who currently serves as the Assistant General Manager and Head of Credit Rating, Marketing Intelligence Unit, and Sustainable Finance at the South Indian Bank Limited. With nearly 2 decades of banking experience, Mr. Anand has demonstrated exceptional expertise across diverse domains, including credit risk management, proprietary trading, treasury operations, and sustainable finance. His journey with the South Indian Bank has seen him lead several key roles, rising from research analyst and marketing officer to treasury back office and forex trading head to chief manager of the marketing intelligence unit, and now at the helm as AGM and head. In his current capacity, he oversees credit risk assessment, stress testing, market risk, liquidity risk, and sustainable finance initiatives, contributing significantly to the bank's strategic vision. He has been instrumental in establishing frameworks, designing procedures, and leading innovative projects that strengthen financial resilience and drive forward looking growth. Mr. Anand's career stands as a testament to leadership, innovation, and commitment to excellence in banking and finance. We are truly honored to have you with us today, sir, to share your insights and expertise.
Yeah, thank you.
So, to begin, let us turn to the foundation of every financial journey. Definitely, it is banking. And let's start with the question that in today's fast paced financial world, young professionals often limit their engagement with banks to just maintaining a savings account. However, effective financial planning requires a strategic use of products like fixed deposits, recurring deposits, mutual funds, and even digital banking solutions. So, from your experience, how effective are these banking products in helping individuals achieve long term financial security? And what should young earners prioritize when integrating them into their financial plans?
Yeah, good evening, everyone. Thank you, Steffi. Thank you, Mark, for organizing such a beautiful event. In our almost 2 decades of academic life, we study multiple subjects, science, maths, accounts, finance, multiple area we are expertise. But when it comes to managing money, we never got any academic experience or academic study we have experience in our 20-year life. So I think today, Mark, Marian Alumni Association, taken an initiative to at least fill that gap. I appreciate that effort and very well done and keep up such initiative in the coming days. Coming to the topic of financial planning and maybe in a way managing your wealth, I think fundamentally couple of things we must keep in mind always. So those are fundamental. Before moving into the banking product, I just start with some kind of basics of financial planning. So in we all know financial planning, the fundamental principle will be start early. Anyway, in if you look at any of your uh, successful with wealth manager or some successfully made money through investing, the fundamentally what they done is they start early. So take the case of Warren Buffett. He started at the age of 11. Now he is at the age of 95. So simple based on simple compounding mathematics, I think he would have been a billionaire now. Even if he invested normal, the way we invested, the way also he also invested, he would have been a billionaire. If 1 lakh is invested 84 years back, if it would have been compounding at 14%, it would have been almost 800 crores. So that is the power of compounding. It is the time which make money. Ideally, when we used to say time is money, in finance world, it is absolutely apt. Time is money. As long as you stay with the investment, you will obviously will make money. In our finance team, we used to say 72 bar percentage, 72 divided by how much percentage of yield which is giving will decide the doubling of money. For example, if you are investing in 10%, if you are getting average 10% yield on your investment, 72 divided by 10, so every 7.2 year your money will double. So next 14 year it will be, for example, if you are investing 1 lakh today, 7.7 after 7 year it will be 2 lakh, 14 years it will be 4 lakhs, 21 year it will be 8 lakhs, 28 years it will be 16 lakhs. So 1 lakh will be paying 16x in the matter of 27, 28, 29 years. So you have a life of maybe academic or career life of maybe 38 to 40 years. So once you start the for initial investment of 1 lakh itself will maybe reaching almost 40, 50x once you retire. So that is a power of compounding. So fundamentally always start early when you are coming into the field of job market. Obviously the one step which you can start you can practice is start investing early. Second thing is obviously this is asset allocation. I think multiple asset class in the coming section people will discuss. I will talk about deposit also. So in the asset allocation side, multiple assets are there. Which different asset is having different risk profile, different return profile. One of the asset class which we all know, deposit, it is maybe return it will be safe, return will be stable, maybe 7-8%. Maybe it comes to the equity where some kind of extra risk is there. Historically, it has given a return of almost to 12 to 13% on a long term basis. Some other asset class like gold may give a return of maybe 10-11% on a long term basis. I'm just talking about the historical return which are given over a 10-year, 20-year period of time. So that is a kind of return which we can anticipate over a long period of time. We are not looking for a 1 day return. We are looking for a sustainable return. It may for a 10-year period, 20-year period, 30-year period. So in that context, this is a kind of return profile which normally make. Even real estate is another which mostly everyone is holding. There, the return profile is slightly on the lower side, maybe 4 to 5%, depending on different. Broadly, different cities have different profile, but broadly it is 4 to 5%. Return profile will be slightly on the lower side. So these are the return profiling of different asset classes. So so if you are keeping one asset class alone, there is, if suppose a deposit is obviously risky, so holding the more deposit may, you have to sacrifice some element of return. On the other hand, even though equity is giving 12% return, it is not a guaranteed return. It can vary. Sometimes it can go negative. Some of the historical evidence says some market in equity also it has given significantly negative return. For example, Japanese market. In 1991, Japan index Nikkei touched almost 40,000. After 35 years now, today also it is trading 44,000. So it is just marginal improvement. Last year it was below. I think till 2023 it was trading below 40,000. So almost 30 years of no return, multiple years of negative return. That is something which some market experience. Even in the case of Shanghai Composite, Chinese market. China is one of the fast growing economies. Still, if you look at the performance of Chinese index in 2008, the market touched a high of somewhere around 6,000. Now also it is trading below 6,000, below 4,000 level. So after almost 20 years, Chinese market is given negative return. The similar is the case with Hang Seng market, so Hong Kong market. So multiple market we can see, all market is not compounding. Some market, especially in India, US and all, the compounding is meaningfully working. So I think equity, that point of view, it can provide return, but there is an element of uncertainty, element of risk. So in a prudent financial planning, we all now need to keep a perfect balance between these combos, whether it's a fixed debt instrument like fixed deposit or equity, slightly highly risky deposit. So that asset allocation purely depend on your risk appetite, your ability to absorb shock. Shock means if equity is coming down consistently next 2 3 years, whether you can absorb that, you have the shock absorber is the fundamental question. If you have the shock absorber, then you can take some extra risk. If you don't, then slightly bias towards fixed instrument. So that balance always should be there. That perfect balance will tide over the challenges or some kind of uncertainty which is coming in the, especially in the market side, any kind of uncertainty come, you can balance with the perfect asset allocation. Then coming to that third point which we need to consider is always stay away from trading. Fundamentally, even recently one study, we have an appetite to trade because we are slightly adventurous. So we need some kind of adventure always. So in that context, I recently one SEBI study was there. So 90% of retail traders, especially in the futures and option, they are losing money. On the other hand, if you take Indian market, anybody invested in Indian stock market, 90% of would have made money. I think Shinil was there last 10, 20 years in the market. If he is invested, he would have made money. When I was there in the market last 20 years, if you blindly invested also, we would have made money. Even if without any study, put some SIP or some, whichever form you invested in stock market, you would have made money. So 90% of traders are losing money. 90% investors are getting money. So it's simple call which one you have to select. So ideally stay away from trading. Plus one more thing which we always keep in mind is that we all are basically greedy people. Human nature is biologically we are greedy. We want money immediately. If suppose somebody say your money will double within a year, then we have a tendency to, we know it will not double, but we will say someone else money got doubled, then we have a tendency to invest such filthy investment. So that is why we can see in Kerala, every 1 month we can see some kind of scam. Somebody cheated with maybe thousands of crores. They cheated in multiple maybe scams. So these are really happening because we have a tendency, we have the appetite to, we have a greediness in our mind. We have a greediness bias. So in fundamentally, one thing we have to keep it in mind, the highest risky asset, which is giving a return of, that is equity, which is giving a return of somewhere around 12 to 13%. That is a historical return. If anybody is offering you more than 12 to 13 or more than 15% return, then you should keep it in one thing in mind. your principal is at risk. You may get returned maybe 1 month, 2 month, 1 year, but your principal is at risk. You are not going to get the principal in the probability I'm saying, high probability is that you are not going to get the principal. So always keeping in mind, don't trust somebody is offering more than 15% return in any asset class, whether equity, real estate, gold, wherever. So historically, on a sustainable basis, it will not give any return. So these basic things, if you keep it in mind, then fundamentally you can manage your money well. Then coming to the banking side, multiple products are there. We all know deposit is the predominant source of investment by everyone. So I think most of them is in this webinar. I think they must be having some kind of bank account. Their fund is transacting. Many of them having some kind of fixed deposit also. So mostly, I think everyone knows the features of fixed deposit. The advantage of fixed deposit with compared with other investment is it is predictable, it is stable, it is liquid. We used to say friend in need is friend indeed. So whenever you want money, it should be available. Sometime you may lose the job. Sometime you have some emergency can come. Sometimes some emergency to purchase something can come. So that point of time we should get the money. So I think that liquidity is something which fixed deposit or any kind of bank deposit always offer. So if you want to break a deposit, you will get the interest, only some kind of penalty you have to pay. You will get the principal plus with some interest. If you want liquidity anytime, it is just a matter of in everything is available in mobile phone. With a one click, you can deposit your money. With a click, you can withdraw the money. If you can pre-close the deposit with some kind of penal interest, you will get the principal. Only the interest portion you have to pay some kind of penalty if you are prematurely closing the deposit. In addition to that, if suppose anybody in one of the strategy which I used to adopt is I created some kind of fixed deposit, big amount, reasonable amount. Then OD against that. OD means if you, for example, you have 10 lakh deposit or 1 lakh deposit, 90% you will get loan at any point of time. Whether it's in the form of term loan or OD, any form you will get as a loan. So that also in every bank, their mobile app, it is there. One click, you will get the loan against your own deposit. So without breaking also, you will get the liquidity at any point of time. Plus, emergency fund is something which we all financially, we will say, we must have some kind of emergency fund. People used to say 6 month fund should be keep it as an emergency fund. But if you have a deposit, I think that is an emergency fund only. Anytime you can break, anytime you can take loan against that deposit. Also, if you can create some kind of OD facility, whenever you are using that OD facility, then only you have to pay interest. So these kind of product obviously is a must for everyone portfolio. I'm saying fixed deposit or related product. So that's it. Any
Okay, sir. Yeah. So, yeah, so Anand sir, let me ask you one thing. Like, what is the ideal ratio of bank deposit in one's investment portfolio? Is there anything likewise?
Yeah, I think ideal ratio purely depending on the risk appetite. Different people have different appetite. As I said earlier, also somebody if you are investing in stock market, maybe after 1 or 2 months the price is 30-40% down, then you became panic, then that may not be the right product for you. For you, then fixed instrument will be the right product for you. On the other hand, if you are investing money in equity and after a couple of months, if it is halved, still you can withstand and it will not hurt your mental peace, then you can have better risk appetite and you can have better proportion. Ideal proportion, there is no ideal proportion. People used to say it's based on age. Risk appetite may, or if you are on a younger age, you can take higher equity exposure. People used to say 100 minus your age will be the ideal equity exposure. That is quite aggressive according to me. If you are 20-year-old, 80% you can hold equity, but that is on an aggressive side. Ideally, always keep 50% money in approximately in fixed instrument, because that will give stability. We don't know exactly what will happen tomorrow. There should be always an uncertainty. There is an element of risk. So withstand that risk, some kind of backup should be there in the bank. Backup is there. Bank deposit provide that backup. Plus, as I said, emergency fund. When we need fund, that is for some purpose. Emergency can come unpredictable time. So bank deposit is something which we can provide that kind of comfort, that kind of liquidity when you need the fund. So always keep a higher proportion. It will overall portfolio, if you keep 50%, maybe somewhere around 7 to 8% return it will give. Maybe some portion you can keep it in gold, maybe 20, around 15-20%. Some portion you can keep it in equity, maybe 20-25%. I'm saying if you are owing a house, it need not consider as an investment.
Okay, sir. And one more thing, like when we talk about investments, like when I have a mutual fund investment or stock market investment, then why should I choose a bank FD? I think many of us will have the same question.
As I said earlier, also equity. You are talking about mutual fund, equity-oriented mutual fund or liquid mutual fund. Liquid mutual fund is a good option to have for. I mean, ultimately, ultimately you want fund. If fixed deposit is something which gives slightly superior return than liquid mutual fund. Liquid mutual fund may give current rate maybe somewhere around 5.5, 5.7, 5.8, 6%. Maybe FD you will get 7 in and around 7%. So some kind of XR return is something which compared to liquid mutual fund. Liquid mutual fund, you all know, multiple options are there. Equity is there. As I said earlier, equity side, there is a risk. As in the past, we are experiencing significant return, especially 12 to 13% compounder return is something which Indian equity market delivered. But on the other hand, as I said earlier, also if you look at Japanese market, 1950 Japanese Nikkei index was 100. 1991 it went to 40,000. So matter. I mean, it gradually it went up. 100 became 1,000 by 16. Subsequently, it gone up 10,000 to 40,000. So matter of 40 years, it became 100 became 40,000. But last 30 years, it has given flat return, no return. Similarly, as I said, Chinese market, it can give negative return. If country is growing, normally in high probability is that we will get a reasonable return. But there is an element of uncertainty, there is an element of risk which we don't know. In order to mitigate that, yes, a meaningful portion has to be kept in fixed deposit that is predictable, liquid, and convenience. It is a matter of 1 second you can withdraw. In a matter of 1 second you can invest. None of the other facility will offer that. So always it's a mixer.
Thank you, Sri Anand sir, for laying such a strong foundation. So from banking, now let's move to the next step of building wealth through investments. And now it's the time to introduce our next panelist, Dr. Shinil Sebastian, a dynamic professional who seamlessly blends academia, administration, and entrepreneurship. With over 18 years of multifaceted experience, Dr. Shinil is not only a distinguished academician holding a PhD in commerce from Christ University, Bangalore, but also a visionary leader in financial education and innovation. He has served as academic dean and associate professor, spearheading curriculum development, accreditation processes, and fostering industry academia collaborations. Beyond the academic world, Dr. Shinil is an accomplished entrepreneur. He is the founder and CEO of KeralaSpicesOnline.com, a globally recognized e-commerce platform for Kerala spices, and RootsToWealth.com, an initiative dedicated to wealth management and financial literacy. His rich industry experience also includes leadership roles with Georgette Financial Services and IDBI Capital, as well as his independent practice as a financial consultant. Dr. Shinil has significantly contributed to research in financial markets, investor behavior, and wealth creation, with publications in reputed journals and presentations at national and international forums. A passionate educator, administrator, and entrepreneur, Dr. Shinil Sebastian brings with him a wealth of knowledge in financial management, outcome based teaching, entrepreneurship, and wealth creation strategies. So please join me in extending a very warm welcome to Dr. Shinil Sebastian. So today, Dr. Shinil Sebastian will simplify the often intimidating world of mutual funds for us. Dr. Shinil? So my question,
Yes, yes, yes. Thank you.
yes, yes, welcome. So shall I raise a question?
Yes, Steffi, you can go ahead.
Okay. So, sir, it's like mutual funds are often recommended for new investors. But the terminology SIP, NAV, or ELSS can be quite confusing again. So, could you please simplify these mutual funds for our audience and explain why they are ideal for long term wealth creation?
Thank you, Steffi. First of all, I thank you, all Marine Alumni Association, for arranging this kind of programs and initiatives. I really appreciate the association members and leaders and all. Uh, Let me come to the point, or maybe the questions which asked by Steffi. Uh, as already most of the points Mr. Anand already covered, but I may cover up some details from the mutual fund industry. Say, all of you know that it's a mutual fund is a pool of savings collected by fund manager and investing that fund in different asset classes and generate return. That return pass to the investors. So that is a concept of mutual fund, means collecting collecting money from various investors and putting in the different asset classes. Asset classes can be, as already mentioned, is equity classes, or maybe in debt products, or maybe real estate products, or maybe some government debt products and all. So this invested fund will generate some kind of return if it is an equity fund. Definitely, this when equity market goes up, your fund also will perform. So as Anand already said, equity market give a better return than other asset classes. And sometimes it may come down. Negative return also is there. But the mutual fund, how it works, it's a diversified asset classes. Say the collected fund will be invested in the various asset sources. So the risk of investing or putting money in the mutual fund is nullified, or maybe it is reduced. So because it is diversified, so it's not only investing in a one asset classes, it may be mix of different asset classes. It can be equity fund, or maybe mix of equity and debt fund, or mix of different asset classes, or maybe dynamic asset dynamic asset allocation funds, like maybe investing in commodities also. So like that, uh, the invested amount will be protected because of diversification. So that is the beauty of mutual fund. The major advantage is portfolio diversification. In single asset or single investment avenue, you are investing your fund in various asset classes. So that is a different. Then you were asking about SIP, some terminologies, SIPs, NAVs, ELSs, and all. When it comes to mutual fund, so there are different uh, products are available. Products in the sense, different types of funds are available. Here, any kind of investors, those who are ready to take much risk, those who are ready to take a very least risk, those who are ready to take a moderate risk, such kind of investors, all kind of investors, they have products in mutual fund. That is another advantage of mutual fund. It is not only for the high risk takers, it is not only for a low risk takers. So any class of investors, there are options. So that is another advantage of mutual fund. So another thing, so you were asking about SIP, NAV and all. I'll come to the SIP. So before that, let me tell you that in mutual fund, there are different ways to invest. Some people are confused with the SIP. It's a mutual fund. I am investing in mutual fund. It's a SIP. SIP is one product, and another thing, it is a mutual fund. Is they are thinking that SIP is a mutual fund. SIP is not the mutual fund. SIP is the way of investing in mutual fund. There are two ways people can invest in mutual funds. So either it is through an SIP, or it's like a one-time investment or lump sum. We call it as a lump sum investments. So that is about the difference between, or maybe you should understand the terminology of SIP. I will explain what is SIP and all. First, these are the two ways. That means SIP is a one way and lump sum is another way. SIP says it's a systematic investment plan. So here what we are doing, it is a fixed amount of money we are investing regularly for a fixed period of time. So that is what we call it as a systematic investment plans. Here we maintain a discipline every month. For example, every month 5,000 I am investing for a period of another 10 years or 5 years or maybe for a 1 year. Every month I will keep aside or 5,000 rupees to automatically move from my bank account to the mutual fund. So there I am keeping a discipline. So from the bank account is automatically moved to the mutual fund. So it's a systematic investment. What is the advantage of systematic? There we are keeping a discipline. Another thing it is, as you know that as a mutual fund or a stock market, most of the funds will be go to the stock market or asset classes will be stocks. So you know that every time stock market is fluctuating. So you know that you may heard about a different news like market come down by 1,000 point, 2,000 point down. Some days says a 2,000 points up. All these are fluctuations. When you are investing in mutual fund or through an SIP mode, so this fluctuation will give an advantage. So that is the another thing point, another point explained by Mr. Anand, power of compounding. So rupee cost average, we call it as a rupee cost average. Means every time when you are investing in a mutual fund through an SIP, you are purchasing, you are averaging it. So sometimes this month you may be getting a lower price, that means NAV, net asset value. That is the unit value. Please understand another terminology we're asking that NAV. NAV is a one unit value. When it comes to stock, price of a share, price of a single share. Here it is a unit value. It is differentiated. Stock is different, and here it is unit. It's a mutual fund always called as a unit value. That is what called as a per unit value. We call it as a NAV. So that NAV is fluctuating when market is going up and down. It means this month you may be got at 10 rupees. Next month you may be getting it at 9 rupees because of market came down. Next month or following months it may be 11 rupees per unit because of market is fluctuating. So because of this fluctuation, taking advantage of this fluctuation, this SIP is the best route. So SIP is the one of the best way to create a long-term wealth. That is why most of the people, I'm a regular investor. Last 15 years, I'm investing in mutual fund. I started starting from my career. I started this SIP. Just started with the 500 rupees that days. So that is another advantage. Please understand, SIP is you can start with even a small amount. So even 100 rupees SIP is available. Say in a mouse click, you can start SIP. That is possible nowadays because of technology. So what I mean it is for creating a long-term wealth or wealth creation, SIP is the best route in mutual fund. And another advantage and says SIP, you are saying SIP you can start at any point of time and you can pause at any point of time. You can stop at any point of time. So that is the another advantage. If you are saying that okay, I started an SIP for the next 10 years, I signed all this, or maybe I give an instruction to start SIP 5,000 for the next 10 years. But in between, I thought, okay, I don't want to continue. I can stop it. So that is another. There is no charges at all. So I can stop it over there in 6 months' time, or maybe after 6 months, or maybe after 2 years, I can stop and withdraw my entire amount. What is the market value of that fund? So that is another advantage of mutual fund. That is a SIP. When it comes to another mode of or another way of investing, it's a lump sum. Means if you have a fixed amount of money with you, say 1 lakh rupees is there. You can simply invest. You can select a one fund and you can put that money in a mutual fund as a one-time investment. And another, again, you may thinking that if I invest a one time, is it like a fixed deposit? No. Any point of time you can withdraw. If it is within 1 year, if you are withdrawing, there will be a charges. Say 1% will be there. After 1 year, there won't be any charges. So that is advantage. So there are two methods: lump sum investment and SIP. These are two methods. SIP is a method of investing. Please understand that. So I hope I cleared some of the terms which you are asked.
Sure,
So you
sir.
can ask if you have any further questions on this.
Yes, sir. You have rightly confined to 10 minutes time. And of course, because you have very well narrated like mutual fund as an investment option for creating long-term wealth. Long-term, but I would like to know like why should one consider mutual fund for long-term wealth creation when compared to other investment options?
Okay. See, as I already mentioned that there are funds different types of funds. Say, for example, if it is most of the funds are giving, if you are taking the history of the most of the funds, equity funds, it last 20 years return, if you are taking, it gives more than 15 to 18 percentage. Some of the funds, or maybe some funds may be given 12 to 16 percentage. There are some good funds which is given average return of 16 or 17 percentage return compared to any other asset class. If you are saying it is a average return of Sensex or Nifty or benchmark index, that may be grown maybe 13 14 percentage. But funds, mutual funds are given better return than market because of the fund managers, how they are managing their portfolio. So there are dedicated fund manager, there is a team, they are doing a research and investing. That is why they give a better return than our market. Market may be given only 13 percentage, but a fund may be given a 16 percentage because of better fund portfolio, but portfolio management by the fund manager. So that is one of the best, one of the reason the person should choose a mutual fund as an asset class or maybe investment avenue to better retain. Say, instead of going for a direct equity, if you are going to investing in mutual funds, your funds are managed by professionals. So your funds are safe. And as I already mentioned, it is because of diversification, your risk are reduced. So one more things I just tell you is that there are some of the myths or maybe some of the misconceptions about this investment avenue. Many are thinking that mutual funds are only for a small big investors. As like a small investors, even I may not able to start with 1,000 rupees and all. So that is kind of a misconception or will be there. So I'm saying that, say, even 1,000 rupees or 100 rupees you can start. Another concept people are thinking that is a market linked. If market is not performing, your fund will not perform. As I already mentioned, there are debt funds, equity funds, commodity funds, gold fund. If you want to invest in gold fund, there are gold funds. You don't need to buy gold exactly as. Say gold, when it goes by 10%, your fund also will grow. So there are gold funds, silver funds. All these are available. Then another thing it is, people are thinking that there are more charges. No, is there are less charges. Nowadays, SEBI is involved and charges in mutual funds are very less compared to any other asset classes. I hope I have cleared your questions.
Yes, Dr. Shinil. Yes, thank you so much for that clarity. And once we understand mutual funds, the next natural curiosity for many young professionals is the stock market. So it's now the time to introduce our next panelist, Mr. Davis Joseph, again an accomplished academician, finance professional, and trainer in personal financial management. So, Mr. Davis is currently working as assistant professor and placement coordinator at Marian College, Kottikana, with a strong foundation in finance and banking from Christ University, Bangalore. He brings both academic rigor and practical expertise to his teaching and mentoring. His professional journey spans across diverse roles. He has served as a business analyst in Dubai, an assistant lecturer at Christ College, and a research scholar at SRM University, Chennai. Each role enriching his insights into finance, investments, and education. Specializing in personal finance, stock markets, and investments, Mr. Davis has a unique ability to simplify complex financial concepts, empowering individuals to make informed decisions for financial security and success. His skills extend to financial planning, technical and fundamental analysis, portfolio diversification, and risk management, with certifications from NISM, Yale University, and GT in FinTech and Innovation, further adding to his professional credibility. A passionate educator, strategist, and mentor, Mr. Davis Joseph is dedicated to equipping learners and professionals alike with the tools to thrive in today's dynamic financial world. So let's put our hands together for welcoming Mr. Davis Joseph to the panel. So, yes, so now it gives me great pleasure, Davis sir, that you have joined in this panel discussion. And now, my question here is like, David sir, am I audible?
Yes, ma'am.
Okay, fine. Yeah. So of course, the stock market often feels like a coaster for beginners. So could you shed light on how a young professional can begin their equity investing journey very responsibly, and how they should approach risk?
All right. Thank you, ma'am. Thank you, Steffi. And I want to thank Marine Alumni Association and all the panelists here. Ma'am, since most of our participants are students, is it okay if I use a Malayalam little bit in the middle?
Sure,
Okay.
sir.
Um, First, I want to respond to something mentioned by Anand. He mentioned that finance is not taught in school. What happens is, even my wife is a teacher and she has a master's in, actually, she has MSc mathematics and she's also a university rank holder. But unfortunately, she's teaching English, GK, and IT in school. So that's how the system is designed. And whenever we try to conduct some sessions or seminar for students, they're not even willing to listen a little bit. So there is this gap when it comes to personal finance. And in my perspective, it's basically about inflation and tax. Like ഇൻഫ്ലേഷൻ എന്ന് പറയുന്നത് ആസ് യു ഓൾ നോ പണപ്പെരുപ്പമാണ്. ഇപ്പം നമ്മുടെ കയ്യിലിരിക്കുന്ന കറൻസി എടുത്താൽ അതിനൊരു ഇൻട്രിൻസിക് വാല്യൂ ഇല്ല. ഇൻട്രിൻസിക് വാല്യൂ എന്ന് വെച്ചാൽ പണ്ട് ഒരു സ്വർണ്ണ നാണയം ഉപയോഗിച്ചിരുന്ന സമയത്ത് ഒരു സ്വർണ്ണ നാണയത്തിന്റെ വാല്യൂ എന്ന് പറയുന്ന ആ സ്വർണ്ണ നാണയം മെൽറ്റ് ചെയ്താൽ കിട്ടുന്ന സ്വർണത്തിന്റെ വാല്യൂ ആയിരുന്നു. അൺഫോർച്ചുനേറ്റ്ലി ബ്രെട്ടൺ വുഡ് കോൺഫറൻസും റിച്ചാർഡ് നിക്സൺ ഷോക്കിനെല്ലാം ശേഷം ഇന്ന് നമ്മൾ ഫിയറ്റ് കറൻസിയാണ് യൂസ് ചെയ്യുന്നത്. ഈ ഫിയറ്റ് കറൻസിയുടെ വാല്യൂ എന്ന് പറയുന്നത് അതിന്റെ നടുക്ക് കൊടുത്തിട്ടുള്ള ഒരു സ്റ്റേറ്റ്മെന്റ് ആണ്. ഐ പ്രോമിസ് ടു പേ ദ ബിയറർ എ സം ഓഫ് റുപ്പീസ് XYZ ബൈ RBI ഗവർണർ. സോ ഇതിന്റെ പ്രശ്നം ഇറ്റ്സ് ഓൺലി എ പ്രോമിസ്. ഈ ഇൻഫ്ലേഷൻ എന്ന് പറയുന്നത് ഇതിന്റെ വാല്യൂ കുറഞ്ഞുകൊണ്ടിരിക്കുകയാണ്. അതിന് നമ്മൾ കോസ്റ്റ് പുഷ് ഇൻഫ്ലേഷൻ, ഡിമാൻഡ് പുൾ ഇൻഫ്ലേഷൻ എന്നൊക്കെ വിളിക്കും. ഇൻഫ്ലേഷനെ നോർമലി ഗവൺമെന്റ് കാൽക്കുലേറ്റ് ചെയ്യുന്ന രണ്ട് മെട്രിക് വെച്ചാണ്, കൺസ്യൂമർ പ്രൈസ് ഇൻഡെക്സും ഹോൾസെയിൽ പ്രൈസ് ഇൻഡെക്സും. എനിവേ ഏതൊക്കെ മെട്രിക്സ് കമ്പൈൻ ചെയ്താലും ഒരു 7 to 8% ഇൻഫ്ലേഷൻ നമ്മൾ നോർമലി പ്രാക്ടിക്കലി ഫേസ് ചെയ്യുന്നുണ്ട്. സോ നമ്മുടെ കയ്യിലുള്ള കറൻസിയുടെ മൂല്യം 8% കുറയുകയാണ്. അതിന്റെ കൂടെ യു ഷുഡ് ഓൾസോ കമ്പൈൻ ടാക്സ്. ലൈക്ക് നിങ്ങൾ ഏൺ ചെയ്യുമ്പോഴും നിങ്ങൾ സ്പെൻഡ് ചെയ്യുമ്പോഴും നിങ്ങൾ എന്തെങ്കിലും ബൈ ചെയ്യുമ്പോഴും നിങ്ങൾ സെല് ചെയ്യുമ്പോഴും ഓൾവേസ് വി ആർ പേയിങ് ടാക്സ്. ഞാനൊരു പുതിയ വണ്ടി മേടിക്കുകയാണെങ്കിൽ അതിന്റെ ബേസിക് പ്രൈസിൽ GST വരുന്നുണ്ട്. ഞാനൊരു 16% റോഡ് ടാക്സ് കൊടുക്കണം. എഗെയിൻ ഞാൻ ഫ്യൂവൽ ഫില്ല് ചെയ്യുമ്പം ഓൾമോസ്റ്റ് ഒരു 30 റുപ്പിയുടെ ഫ്യൂവൽ ഞാൻ 104 റുപ്പീസ് പേ ചെയ്യും. ദെൻ വൺസ് അഗെയിൻ ഞാനൊരു ആ വണ്ടിയിൽ ഒരു ടീ കുടിക്കാൻ പോവുകയാണെങ്കിൽ ഐ എം പേയിങ് GST. ഞാനൊരു മൂവിക്ക് പോവുകയാണെങ്കിൽ ദർ ഇസ് എന്റർടൈൻമെന്റ് ടാക്സ്, സെസ് വരും, ടോൾ വരും, എവറിഥിങ് ഇസ് ദെയർ. സോ വെൻ യു കമ്പൈൻ ഇൻഫ്ലേഷൻ ആൻഡ് ടാക്സ്, the value of your currency is depreciating by about 12%, right? So ഈ 12% നമ്മുടെ കയ്യിലുള്ള പണത്തിന്റെ മൂല്യം കുറയുമ്പം you should get something above that, and that's where investing comes in. So ട്രഡീഷണൽ ആയിട്ടുള്ള ഇൻവെസ്റ്റ്മെന്റ്സിനെ നോക്കുവാണെങ്കിൽ, അറിയത്തില്ലാത്തവർക്ക് വേണ്ടി ഞാൻ ജസ്റ്റ് പറയാം, നമ്മൾ ബാങ്കിൽ വെറുതെ പണം ഇൻവെസ്റ്റ് ചെയ്യുവാണെങ്കിൽ, സേവിങ്സ് അക്കൗണ്ട് ആണെങ്കിൽ about 2 to 3% റിട്ടേൺസ് കിട്ടും. നമ്മളതൊരു FD ആവുകയാണെങ്കിൽ, ഡിപ്പെൻഡിങ് ഓൺ ദ ടൈപ്പ് ഓഫ് ബാങ്ക്, ഒരുപാട് സെക്യൂർ ആയിട്ടുള്ളതാണെങ്കിൽ about 5 to 6% റിട്ടേൺസ്. കുറച്ചുകൂടെ ലോക്കൽ ആയിട്ടുള്ള ബാങ്ക്സിലേക്കൊക്കെ പോവുകയാണെങ്കിൽ ഒരു 8 to 9 to 10% ഒക്കെ റിട്ടേൺസ് നമുക്ക് കിട്ടും. ബട്ട് വൺസ് അഗെയിൻ FDയുടെ പ്രശ്നം, ഇത് ഓവർ ഡ്രാഫ്റ്റ് എടുക്കാമെങ്കിലും ഇത് എപ്പോഴും ലിക്വിഡ് അല്ല. ഈ 1 ഇയറിനുള്ളിൽ നമ്മൾ വിഡ്രോ ചെയ്യുവാണെങ്കിൽ ഇറ്റ്സ് നോട്ട് ദാറ്റ് യു ആർ നോട്ട് ഗോയിങ് ടു ഗെറ്റ് എനി റിട്ടേൺസ്. സംടൈംസ് നമ്മൾ ഒരു ഫൈന് തിരിച്ച് പേ ചെയ്യേണ്ടി വരും. സോ ആ കേസിൽ ഷിനിൽ സാർ പറഞ്ഞ പോലെ ഒരു ഡെപ്റ്റ് മ്യൂച്വൽ ഫണ്ട് ഇൻസ്ട്രുമെന്റ് യൂസ്ഫുൾ ആണ്. അത് എപ്പോഴും ലിക്വിഡ് ആണ്. മാത്രമല്ല ഒരു ഡെപ്റ്റ് ഇൻസ്ട്രുമെന്റിലല്ല ഇൻവെസ്റ്റ് ചെയ്യുന്നത്. സോ റിട്ടേൺസ് എല്ലാം ഓൾമോസ്റ്റ് സെയിം ആയിരിക്കും. ദെൻ വി ഹാവ് ചിറ്റ് ഫണ്ട്സ്, നമ്മൾ ചിട്ടി എന്നൊക്കെ പറയുന്നത്. അതും ഇറ്റ്സ് നോട്ട് ആൻ ഇൻവെസ്റ്റ്മെന്റ്, ഒരു ആവശ്യത്തിന് വേണ്ടി കൂടുന്ന ഒരു സാധനമാണ്. യു നോട്ട് ഗോയിങ് ടു ഗെറ്റ് എനി റിട്ടേൺസ് അബൌവ് 8 or 9%. ദെൻ വി ഹാവ് അവർ ട്രഡീഷണൽ ഇൻവെസ്റ്റ്മെന്റ്സ്, നമ്മൾ ഗോൾഡും സിൽവറും ഒക്കെ പറയും. പ്രശ്നം ഓർണമെന്റ്സ് ആയിട്ട് മേടിക്കുമ്പോൾ ഒരു 1 lakh റുപ്പിയുടെ ഗോൾഡ് മേടിച്ചാൽ കയ്യിൽ കിട്ടുന്നതിന് ഒരു ലെസ് ദാൻ 70,000 റുപ്പീസിന്റെ വാല്യൂ കാണത്തുള്ളൂ. ബിക്കോസ് പണിക്കൂലി എന്ന് പറഞ്ഞ് വി ആർ പേയിങ് ദാറ്റ്, വേസ്റ്റേജ് ചാർജസ് പേ ചെയ്യണം, ഹോൾ മാർക്കിംഗ് ചാർജസ് പേ ചെയ്യണം, ഈവൻ അതിന് GST പേ ചെയ്യണം, സർവീസ് ചാർജ് പേ ചെയ്യണം. There's a lot of issues buying gold in physical form. Even ബിസ്ക്കറ്റ്സ്, നിങ്ങൾ ഇപ്പോൾ ഒരു സിൽവർ ബിസ്ക്കറ്റ് മേടിക്കുവാണെങ്കിലും ഒരു 6% അതിൽ പണിക്കൂലി വരും. ദെൻ GST, ഇത് തിരിച്ചു കൊടുക്കുമ്പോൾ ഒരു 10% കുറച്ചേ മേടിക്കത്തുള്ളൂ. അവിടെയും ഒരു നമുക്ക് വാല്യൂ കിട്ടുന്നില്ല. ദെൻ വി ഹാവ് റിയൽ എസ്റ്റേറ്റ്. റിയൽ എസ്റ്റേറ്റിന്റെ പ്രശ്നം പണ്ട് ഭൂമി അണ്ടർ വാല്യൂഡ് ആയിരുന്നു, നൗ ഇറ്റ്സ് ഓവർ വാല്യൂഡ്. അതുപോലെ തന്നെ ചെറിയൊരു ഫണ്ടായിട്ട് ഒരു ചെറിയ ഇൻവെസ്റ്റർക്ക് ഇൻവെസ്റ്റ് ചെയ്യാൻ പറ്റില്ല. സോ ഇതെല്ലാം പിൻ പോയിന്റ് ചെയ്യുന്നത് സ്റ്റോക്ക് മാർക്കറ്റിലേക്കാണ് അല്ലെങ്കിൽ ഇക്വിറ്റി ഇൻവെസ്റ്റ്മെന്റ്സിലേക്കാണ്. സോ എബവ് 12% റിട്ടേൺസ് കിട്ടണം, നിങ്ങളുടെ കയ്യിലുള്ള പണത്തിന് ഒരു 10% എങ്കിലും എബവ് ഇൻഫ്ലേഷൻ ആൻഡ് ടാക്സ് കിട്ടണമെങ്കിൽ ഐ തിങ്ക് ഇറ്റ്സ് ദ ഓൺലി ഓപ്ഷൻ ഔട്ട്. സോ ദാറ്റ്സ് വൈ പീപ്പിൾ ആർ കമ്മിങ് ഇൻ ടു സ്റ്റോക്ക് മാർക്കറ്റ്. കമ്പാരിറ്റീവ്ലി യു എസിലൊക്കെ ഒരു 60% പോപ്പുലേഷൻ ഇൻവെസ്റ്റ് ചെയ്യുമ്പോൾ നമ്മൾ 1.4 ബില്യൺ ആൾക്കാരുണ്ടെങ്കിലും ലെസ് ദാൻ 10% ആണ് ഇൻവെസ്റ്റ് ചെയ്യുന്നത്. ബട്ട് റീസെന്റ് ഒരു സ്റ്റാറ്റിസ്റ്റിക്സ് ഞാൻ വായിച്ചു, people under the age of 30 they have doubled their you know 20% എന്നുള്ളത് 40% ആ ഇൻവെസ്റ്റിംഗ് റൈറ്റ് നൗ. പക്ഷെ അവിടുത്തെ പ്രശ്നം നേരത്തെ ഷിനിൽ സാർ പറഞ്ഞ പോലെ ഒരു ഇമ്പൾസ് ബൈങ് ആൻഡ് സെല്ലിങ് സ്റ്റുഡൻസിന്റെ ഇടയിലുണ്ട്. ദേ നോട്ട് ഫിനാൻഷ്യലി വളരെ ലിറ്ററേറ്റ് ആയിട്ടല്ല അവര് മാർക്കറ്റ്സിലേക്ക് വരുന്നത്. മേ ബി വൺ റീസൺ ഈസ് എവറിത്തിങ് ഈസ് അവൈലബിൾ ഇൻ ദർ ഫോൺസ്. ആക്ച്വലി ഇങ്ങോട്ട് പോയിന്റ്സ് തരും ചില ബ്രോക്കറേജ് ഫേംസ് ഡേ ട്രേഡ് അല്ലെങ്കിൽ സ്പെക്കുലേറ്റ് ചെയ്യാൻ വേണ്ടി. സോ ദർ ഇസ് ഓൾവേസ് ദാറ്റ് ഇഷ്യൂ. ദെൻ ടോക്കിംഗ് അബൌട്ട് സ്റ്റോക്ക് മാർക്കറ്റ്, നമ്മൾ ബേസിക്കലി ഒരു ബിസിനസ്സുകാരനെ നമ്മുടെ പണം ഏൽപ്പിക്കുന്ന പോലെ ചിന്തിച്ചാൽ മതി. നമ്മൾ ഒരിക്കലും തകർന്നുകൊണ്ടിരിക്കുന്ന ഒരു ബിസിനസ്സുകാരൻ്റെ കയ്യിൽ പണം കൊടുക്കില്ല. അതുപോലെ തന്നെ റിട്ടേൺസ് വരുന്ന പ്രോപ്പർ ആയിട്ടുള്ള വെൽ എസ്റ്റാബ്ലിഷ്ഡ് ആയിട്ടുള്ള ഒരു കമ്പനിയിൽ വേണം ഇൻവെസ്റ്റ് ചെയ്യാൻ. നമ്മൾ അതിനെ 3-4 ആയിട്ട് നമുക്ക് ഡിവൈഡ് ചെയ്യാം. വി ഹാവ് ലാർജ് ക്യാപ് കമ്പനീസ്, ഇന്ത്യയിലെ ഒരു ടോപ്പ് 100 കമ്പനീസിനെ എടുക്കാം. ദെൻ വി ഹാവ് മിഡ് ക്യാപ്, അതിന് താഴെയുള്ള 250 കമ്പനീസ്. ദെൻ വി ഹാവ് സ്മോൾ ക്യാപ്. ലാർജ് ക്യാപ് വെൽ എസ്റ്റാബ്ലിഷ്ഡ് ആയിട്ടുള്ള കമ്പനീസ് ആണ്, വലിയ മാർക്കറ്റ് ക്യാപിറ്റലൈസേഷൻ ഉണ്ട്, ഒരുപാട് ബിയർ മാർക്കറ്റ്സ് എക്സ്പീരിയൻസ് ചെയ്തവരാണ്. ബട്ട് സ്റ്റിൽ അവരുടെ ഗ്രോത്തും ഒരു സ്ലോ ആൻഡ് സ്റ്റഡി ആയിരിക്കും. സോ ഒരു സ്റ്റഡി റിട്ടേൺസ് ലാർജ് ക്യാപ്പിൽ നിന്ന് കിട്ടത്തുള്ളൂ. മിഡ് ക്യാപ്പ് എന്ന് പറയുന്നത് ഇതിന്റെ ഇടയ്ക്കുള്ളതാണ്. ലാസ്റ്റ് ഇയറിൽ ഏറ്റവും റിട്ടേൺസ് തന്നിട്ടുള്ള സ്പിയർ ആണ് മിഡ് ക്യാപ് സെക്യൂരിറ്റീസ്. അതിന് താഴെ വരുന്ന സ്മോൾ ക്യാപ്പ്, അതിന് എഞ്ചിൻസ് ഓഫ് ഗ്രോത്ത് എന്ന് വിളിക്കും ഇന്ത്യൻ എക്കോണമിയുടെ, ബട്ട് സ്റ്റിൽ ഹൈലി സെൻസിറ്റീവ് ആണ്. ഒരുപാട് അപ്സ് ആൻഡ് ഡൗൺസ് ഉണ്ട്. ദെൻ വി ഹാവ് പെനി സ്റ്റോക്സ്. ഓൾറൈറ്റ്, സോ ദീസ് ആർ ദ ഓപ്ഷൻസ് ജനറലി അവൈലബിൾ. So those who are planning to invest, youngsters who are trying to get into stock market, വളരെ കോമ്പറ്റീറ്റീവ് ആയിട്ടുള്ള ഒരു ഫീൽഡാണ്. ആനന്ദ് സാർ മെൻഷൻ ചെയ്ത പോലെ 90% ആൾക്കാർക്ക് ലോസ് ആണ്. ആൻഡ് ദ റീസൺ ബീയിങ് സ്റ്റോക്ക് മാർക്കറ്റ് ഈസ് ഇൻഹെറന്റ്ലി വോളറ്റൈൽ. ഇതിന്റെ സ്വഭാവം ഇങ്ങനെയാണ്. സോ നമ്മൾ എത്ര ശ്രമിച്ചാലും വി ക്യാൻ നെവർ കൺട്രോൾ ദ മാർക്കറ്റ്, റൈറ്റ്? സോ ദാറ്റ്സ് മൈ അനദർ അഡ്വൈസ് ടു സ്റ്റുഡൻസ്. മാർക്കറ്റിൽ പണം ഉണ്ടാക്കാൻ ഏറ്റവും എളുപ്പം ഫ്രോഡ്സ് ആണ്. സോ റീസെന്റ് ഒരു സ്റ്റാറ്റിസ്റ്റിക്സ് വായിച്ചു, ഏറ്റവും കൂടുതൽ ഫ്രോഡിൽ പെടുന്നത് ഏറ്റവും എഡ്യൂക്കേറ്റഡ് ആയിട്ടുള്ള ആൾക്കാരാണ്. സോ നോർമലി ഇവർ എക്സ്പോസ്ഡ് ആവുന്ന സോഷ്യൽ മീഡിയാസ് ആൻഡ് യൂട്യൂബ് ആൻഡ് ഇൻസ്റ്റ വടവ് ഒരുപാട് ഗുരൂസ് അവൈലബിൾ ആണ്. ഇതൊന്നും സെബി ലിസ്റ്റഡ് ഗുരൂസ് ആയിരിക്കില്ല. അവർ ബാക്ക് എൻഡിലൂടെ ഏതൊക്കെ പ്രോഡക്ട്സ് പുഷ് ചെയ്യുന്നവരായിരിക്കും. സോ ദേ ഷുഡ് ബി ഓൾവേസ് ബി കൺസേൺഡ് അബൌട്ട് ദിസ് ആൻഡ് ഗെറ്റ് പ്രോപ്പർ എഡ്യൂക്കേഷൻ ഫ്രം പ്രോപ്പർ സ്പേസ്. Okay, I think my time is up. Ma'am, is there any questions?
Yes, sir. Thank you. One question, like how can students start their career in stock market?
Starting a career, it's a very challenging space. NISM, NIFM പോലെയുള്ള സെക്യൂരിറ്റീസ് കോഴ്സസ് ഓഫർ ചെയ്യുന്ന ഗവൺമെന്റ് കോഴ്സസ് ഉണ്ട്, അവർക്ക് അത് കണ്ടിന്യൂ ചെയ്യാം. ദെൻ അഗെയിൻ CA CFA പോലെയുള്ള കോഴ്സസ് ഫണ്ട് ഹൗസസിൽ അവർക്ക് വർക്ക് ചെയ്യാം. ഈ ഫണ്ട് ഹൗസസിന്റെ ബുക്ക് മാനേജ്മെന്റിൽ അക്കൗണ്ടൻസിന് വലിയ സ്കോപ്പ് ഉണ്ട്. ബട്ട് വൺസ് അഗെയിൻ അതിൽ പ്യുവർ ടാലന്റിനെ ബേസ് ചെയ്താണ്, മെറിറ്റിനെ ബേസ് ചെയ്തല്ല നോർമലി സ്റ്റോക്ക് മാർക്കറ്റ് ബേസ്ഡ് ജോബ്സ് പോകുന്നത്.
Thank you, sir, for confining to this time and again for your valuable insights. So, while wealth creation is very important, protecting what we create is equally crucial. So, this brings us to our final theme, insurance. And now it is the time to welcome Sri Jubi C. Baby, our final panelist for the day. With nearly 2 decades of proven excellence in sales leadership, Mr. Jubi brings a wealth of global experience spanning India, the UAE, and Canada. He currently serves as a financial advisor of World Financial Group Canada. Earlier, as Deputy Divisional Manager at Dutco Tenant LLC in Dubai, he spearheaded strategic initiatives across the GCC market, pioneering the introduction of ICO shingle roofing, executing over 100 major projects, and surpassing sales targets with remarkable consistency. So, Mr. Joby holds an MBA in Marketing and Finance and from Bharatiyar University, and is complemented by continuous leadership and sales certifications. His professional journey reflects not only business acumen but also a commitment to the community, serving as president of Toastmasters Club, president of the Marian College Alumni UAE chapter, and an executive member of the Syro Malabar Catholic community. So, a collaborative leader, dynamic strategist, and inspiring mentor, Mr. Jubi Baby exemplifies how adaptability, vision, and perseverance can drive success across diverse markets. So, please join me in welcoming him to the panel. So today, our
Thank you.
final panelist, Sri Jubi Baby, will help us understand why insurance is not just for later stages of life, but an essential safeguard for young professionals. So again, it is Sri Jubi sir. Uh, Insurance often seems like something older people buy, but in reality, it's the opposite. So, why is it crucial for young professionals to secure life and health insurance early in their careers?
Thank you. Thank you, Steffi, Ajimun sir, Joji, and MAC committee members for organizing such a event and also inviting me for this. A great question, Steffi, and a common misconception. The truth is that insurance is most affordable and accessible when you are young and healthy. When you are young and healthy, everybody knows that the insurance premium works largely based on the age and health. So the younger you are, the healthier you are, the less you pay. So it is always advisable to start when you are young. Not only that, don't wait for the unexpected things to happen. You know that in older ages, you can come across problems. But in younger ages, in your 20s and 30s, we are not expecting something problem to happen to us. But what if in such an unexpected situation? How do we cover that risk? That is where you need to have a protection in your early ages. And financial security is not only for the people who are having kids. In younger ages, you will have a student loan or some other protection you need. You may have to provide for your dependents. Absolutely, it gives a peace of mind when you have a protection. That is where you need to have a protection in the younger ages. And it also builds a good habit. We are talking about financial security, financial freedom. And that habit, you need to start from younger ages. So you're planning for the future, not reacting to a crisis, actually. We all drive, most of us drive, and we take insurance for our car. And, we dare to drive a car without a license, insurance. But is our life, we give lesser value than a car? What is the most important asset in a person's life? See, as a financial consultant, I will say that the income earning capacity, when you have the income earning capacity, when you are healthy, you can earn whatever you want, you can do whatever you want. But what if your income earning capacity comes to an end tomorrow? With God forbid happens, something happens to you. How will you take care of your family? How your family will keep the same standard of living? So people ask, when you say, do you have insurance? People say that, yes, we have insurance. I've got 10 lakh insurance. I've got 50 lakh insurance. I've got 1 crore insurance. I've got insurance from my company. I've got group insurance. But how do you know that you're protected properly? See, we use a term called DIME method in this, where D stands for debt. You calculate your debts in the form of credit cards, car loans, personal loans. For example, since I'm in Canada, I'll use a dollar thing. So I have a debt of $50,000, and I have an income of let's say $3,000 per month. So you need to calculate the income for 10 years at least to give a proper protection. So in DIME method, the second I stands for income for 10 years. So 3,000 per month. You need to put $360,000. Mortgage. We all know that most of us will have a housing loan, mortgages, and all. So what if something happens to the income earner? Are you going to lose your dream home? No, nobody wants to do that. So calculate the remaining of your mortgage. And I've got 3 kids or 2 kids. What about their education? You anticipate the expense for kids' education. So we roughly say that, in dollar terms, $120,000 for 2 kids, which is $15,000 per year for 4 years. So roughly $730,000, adding everything together, for a person who is having just $3,000 income. So are we protected in the right form? We can all calculate, we can all do an assessment today. Are we protected in the right form? So financial freedom, is it a dream or is it a priority? It has to be a priority. It is like a house's foundation. We call it as a financial freedom as a house where the protection is the foundation of the house, and then comes up the walls as reducing your debts. And Anand rightly said that you need to have an emergency fund. What if something happens? Your business comes down, you are losing your job, some unforeseen situation. How are you managing for the next 6 months? You need to have an emergency fund. And then comes the roof, the most beautiful roof of your house, which is investment. And people before me all explained well about the roofing part, which is the investment part, how to do investing and how to make money out of your money that you make. If the money which you make is not making money for you, you are not going to be wealthy. It's not just earning the money. Your money that you are making should also make money for you. So insurance is something that you don't buy, you don't get it when you need it. That is something which you have to go for it when you don't need it. Because in a crisis situation, when you need insurance, you may not get it. You are old, you are unhealthy, so you may not get it. So that is my tagline. You need to go for insurance when you are healthy and young. I think I've answered your question, Steffi.
Yes, sure, Sata. Yeah, thank you so much. And I think since we are on time, rightly 9 o'clock, I think instead of me raising a questions, now it is the time for the audience to raise questions. The floor is open to the audience. I'm quite sure that you'll be having a set of questions, like how to enhance your long-term wealth. And definitely we have exceptional panelists too. So now the floor is open for questions from audience side. So please feel free to share your queries with our panelists. This is a wonderful opportunity for the students. So please take up the questions. You can either unmute your mic or you can post your questions in the chat box.
Sir, I have one question for you. Myself, Praveen from Central College, Edatwa. Am I audible?
Yeah, please.
Yes, okay. You have discussed about the so many asset classes one can invest. But I think you might have missed one asset class, namely the cryptocurrency. Um, I recently heard that if you had invested rupees 1 lakh in 2015, it would have become almost 3.5 crore now. So it's a trending asset class among the youth actually. Um, so what's your opinion about about investing in cryptocurrency like Bitcoin, Ethereum, like that?
Um, I think I can answer that question. No, fundamentally in financial planning, you should not be fashionable. Many time, as I said, lot of news, lot of noise will be there with related to new products. Cryptocurrency, it is not a legalized instrument in India. It is not legalized so far. So there is no point in thinking about a product which is not legalized in India. That is number one. Number two, in as I said earlier also, in our financial planning, things should be simple. You have to be with simple product rather than the product which you don't understand. If something which we don't understand, never go with. Maybe recently some kind of hype is there in the cryptocurrency. Maybe somebody, maybe US President Trump is supporting that product. Subsequently, some other countries also started supporting. Some kind of some fashionableness is there. But at the end of the day, none of the countries don't want to lose their currency printing power, especially central bank. So in economics, we all know how we manage currency inflation, how we manage growth, currency. Managing currency circulation is the way in which we all manage our money. We all manage our inflation growth equation. So in that point of view, I think none of the country is going to embrace this kind of digital currency product like Bitcoin and all. For the time being, even my fundamental observation about all this kind of fashionable product is that this will come and go. We don't know what exactly is happening, how is managing. So in that context, something which we don't understand, stay away from that and keep it simple. We have enough. If you have a lot of adventurous appetite, then equity is there to have enough adventurous in Indian market. So go with that rather than going with something which we don't understand. That is my
Okay, sir.
take. It's
Thank you.
personal, you know.
Okay, sir. Thank you, sir.
Yes, Salvia, you can raise the question.
Hello, I'm Alvia from Marian College. Um, my question is regarding as a young professional, is it advisable to start investing even with a modest income, even from now being in a college, or should we wait until securing a more stable job because before focusing into an investment? That's my question.
Shall I answer the question?
Sure, sir, sure.
Okay, I would say whenever you start earning money, you should start investment. Whether it is a big earning or a small income, part of your uh, earnings, definitely you have to start from the beginning. As early you start, your return will be more. So when already some panelists mentioned, the early stage of investments will help you to create a wealth in fast way. So when you start your career, a small amount of money you can monthly start saving through an SIP, or maybe purchasing a small stock from the stock market. It's accumulating stocks every month. That can be done, or maybe you can start some RD. So all this is possible. Don't wait for a right time. Right time is when you have income. That is the right time. If you are earning as like a pocket money, I would say from that you have to start saving. Then that habit will develop automatically. I hope I answered your question.
Yeah, sure. Thank you, sir.
I will just add something to it. With figures, I mean, I say it in dollars. You can just take it in rupees. So if you save 10 rupee per month and you start investing for 7 years, so you are actually putting 25,200 rupees, and then the person who starts at the age of 25, he is starting an investment for 7 years. So his total contribution is 25,200. But a person named B, he start investing after 7 years, and he invested the same amount for the next 17 years. So ultimately, with 8% return, the person A will have a return of, with cumulative interest and all, he will have a saving of 128,361 rupees at the end of 24 years. Whereas the person B will have invested, instead of 25,000, he would have invested 61,200 in 17 years, but his return will be 131,221. So that means it proves that you need to start as early as possible, even if with a smaller amount. This is a kind of difference that you will see with compounding interest.
Thank you, sir.
Yes, I think since our time has already exceeded, I think we can come to a final conclusion. So, thank you so much to our incredible panelists, Sri Anand Kuriakos, Dr. Shinil Sebastian, Sri Davis Joseph, and Sri Jubisi Baby for your valuable time and your wisdom. And of course, to our wonderful audience too, thank you so much for your attention and active engagement. And if there is one thing we hope you take home tonight, it's this: your career is the income engine, but your financial knowledge is a steering wheel. Use both wisely. So keep learning, stay disciplined, and most importantly, start now, no matter how small. Because the journey to financial freedom begins with the first mindful step. So we wish you all continued success professionally, personally, and financially. So good night and thank you. And now it's a time for the formal vote of thanks. And for the same, let me
Sorry,
welcome.
sorry to interrupt.
Yes,
Someone
yes.
zero raise on
Yeah,
question.
Mr. Geo Thomas raised hand.
Okay. Okay. Fine, fine, fine.
Geo
Yes,
Thomas,
you.
please.
Hi, here. I think I'm audible. Can you hear me?
Yeah.
Yes, sure.
Yeah, I've not listened to most of this panel discussion, but in the end only I joined. Say one question regarding cryptocurrency I had. That was we were saying if I had invested this much of money in this year, this much would have been the return. If you listen to all any of the discussions regarding investments, many of these illustrations will be examples will be like this only. Had you invested in that stock, this stock there, here, you would have earned this much of money like that. Then the question is whether you had invested, the person who is giving this example, have you invested? Did you sell your house and invested in that? Did you invest in full money in that? We will not get that. He might not have invested even single rupee in that. So most of the illustrations is from the past. Not most of them. All illustration is from the past only. We are not giving any guidance where to invest in future. What will be the sector where you will be able to make money? That never I heard. Nobody is talking about anything about
No,
that. And
fundamentally, we don't know. That is a question. In equity market, as I said earlier also, we don't know exactly what will happen tomorrow. But we anticipate India is a country which is likely to grow fast in the next 20, 25 years, the way we grow in the last 10, 15 years. If the similar kind of growth is coming, Indian stock market will expect it to do well. That
that
is a
that
point. But
that it is already there. Always
sorry.
it is there. That if is always it is there.
That is what we are saying in the initial point itself. We don't know exactly what will happen in the stock market tomorrow. So should not go alone with stock market alone. You have to diversify. We know if you are certain on something that is fixed debt instrument, where for example fixed deposit, government security investment, and that will give you fixed return. That is for sure. You will get, the bank is giving you 7% interest, means you will get 7% interest. You will get quarterly interest on 7%. It annually interest will come 7.5%, 7.4 approximately. So that is if you are.
But
We
that
all know
7%,
stock market is uncertain.
7%,
Then what will happen tomorrow, we don't know. But
that
stock
7% is
market
not
can give a
sufficient to,
better return.
that 7% is not at all sufficient for to match with the inflation rate.
No, no.
So
In reality, what is reality? Normally in RBI always keep real return positive. Real return positive means inflation is 5%, at least 1% extra should be there in the deposit rate. So if you keep today's inflation, it is somewhere around 3% is inflation. Deposit rate you will get almost
That is
6.5
the
to
rate of
7%.
inflation. They are giving actual rate of inflation. What we are feeling in the market or from the money we are spending from the out of pocket, we know that that is
so
not the
can I
rate of.
respond to this?
I have not finished there. I'm not. I'm not. So
Yeah, please go ahead.
what I'm saying is, even insurance also there have been some discussions heard. But how many of you suggest to ask the people to, especially Anandji, I am asking you also in your bank also, how many of you suggest to your customers to take a term policy?
No, you are
Um,
right, Gio. I am agree with you.
You
Term policy
you
is the
all are
right approach.
interested in selling insurance policies which is beneficial for the you only. That income only you are interested in.
No,
How
I
many of
don't
you
comment
suggest
about
term policy
individual
to the
staff, but
customers?
broadly, as you rightly said, if you are insurance, we are taking a call option on your life. So you have to protect your life. The fundamental objective is for insurance is not investing; it is protect your life or protect the
But are we
income,
promoting it?
maybe
But
life as well as your income.
are we promoting it?
Yeah, absolutely. That is what all are doing.
Uh,
If you talk about our
Yes,
panelists, which
no, sir.
share the same view, it is all about protection, right?
That's the view. But
Yes,
then
Gio sir, since we are running short of time, I think it's the time to conclude. And definitely, our panelists for the day have, in fact, very well communicated about the different investment avenues and how every of the avenues will enhance wealth generation for all of us. So definitely, I think the
whatever
advice
be
for
the
the
avenues,
Anand
I
sir has
suggest one thing:
rightly
whoever is interested in
concluded.
investing,
One
look
second, sir.
after.
1 second,
First
Gio
of
sir.
all, give priority to
1 second,
liquidity first.
Gio sir. Yes, Gio sir.
What for liquid?
Yes, 1 second. Let
Whoever
me
is
finally
investing, whatever
conclude.
the kind of investments,
Yeah,
give
thank you so
priority
much.
to
Thank you.
liquidity first.
Yes,
Whatever
yes,
liquid
thank you.
kind, try to increase maximum possible in liquid assets.
Yes, yes, definitely.
Reduce your investment in illiquid assets like land or building to
Yeah,
whatever your need, up to your need only. In that way, if you invest, probably I think you can make more money, or your investments will help you in the
yes,
time of
yes, sir.
requirement,
Thank you.
real need.
Yes, yes,
I think
thank you so
we can
much.
have a part two for the same, so for the same topic.
Yes,
Maybe a debate, or maybe something more. So
yeah, definitely,
I
definitely,
Yeah,
think this is
Gio,
Reshma.
if you
one
want
In
topic
the
more,
one
we
future
will
day.
openly will
programs,
discuss personally.
yes,
We
in the
will discuss
future
personally.
programs too, we can
Yeah, yeah.
take up these kinds of initiatives in our near future programs. Definitely, Gio, sir, will be like giving answers to all of your queries in the
But
forthcoming
also,
discussions.
I think
Definitely,
Sophie will be
and
sharing
Anand
the
sir.
contact details of all the panelists. So
Yeah, yeah, sure,
yeah,
sure, sure.
to get in touch personally.
Definitely, definitely. Yes, Gio sir. Yeah, definitely. I shall share you the details of the panelist. Just ping me up. And Anand sir has rightly concluded that a diversified portfolio. So I think that is, the final conclusion for the day. Once again, thank you so much to all esteemed panel members for sharing your wisdom. It was such a wonderful session. So, thank you for giving me the opportunity to act as a moderator for this wonderful panel discussion again. So, once again, good night. And now it's a time for the formal vote of thanks. And now, my dear friend Reshma is here ready. And she's also a very enthusiastic alumna of who is actively engaging in the activities of our alumni association. Over to you, dear Reshma.
Once again, good evening, and thanks especially to all the panelists. As I was listening, I could, uh, Steffi has very well moderated and prepared questions according to your, specific areas of expertise. So from the question and the answer, that is what I understand. So we covered a lot of areas of financial planning, products, insurance, stock market, financial freedom, mutual fund, crypto, a lot of things which we covered. I think it is a lot for 1 hour. I think there should be a part 2 for this. And I want to especially thank all the panelists, especially Mr. Anand Kuriakos, Dr. Shinil, Mr. Jubi, and Davis sir. And especially I want to thank Dr. Steffi Kejos, my dear friend, who has put in her, from the very moment she's taken this responsibility, she has put her heart and soul to this. And I want to especially thank you and, all the people who are listening, a lot of students and a lot of our alumni, many people are benefiting from this. And I wish all of you have a wonderful evening and thank you for making this time and effort to give back to the society at large. Thank you so much.
Thank you.
Thank you all.
dear Rachel.
Thank you.
Thank you.
Thank you all once again. Have a great